Hey CEOs, this is your girl Sonia Jones with GFP Financials, your Mr. Miyagi of Money. All right, so today we're talking about the balance sheet. This is two of the three financial reports that you're going to need to know as a CEO, right? So, what are we doing today? Talking about the balance sheet. Stay tuned. More to come. All right. Welcome back, CEOs. We're talking again about the balance sheet. And if you have not liked or subscribed to this channel, what are you waiting for? Doing all this teaching, you just gonna pass by? You better like and subscribe to this channel. Quit playing. All right. So let's talk about the balance sheet. So if you listen to my last video, we talked about your business being a tree. Your business financials are a tree. So you got the trunk of the tree, you got the roots and the water that flows into the roots to the trunk, and then you got the beautiful leaves and the fruit, all that wonderful stuff. So the balance sheet is the trunk. It is the source, the main part of your tree. And if you think about it, the balance sheet is basically there for your business. It lets lenders know where your business stands. It also gives you the value of your business. So what that report looks like, and I'm just giving you the nuts and bolts of it. I'm not going to overwhelm you today because, you know, I'm a teacher. And I will teach that thing all the way from the rooter to the tutor. So basically what the balance sheet does, it compares your assets, right? The money coming into you to your liabilities and your equity, right? That's where the balance comes from. The assets have to equal the combination of your liabilities and your equity, right? So let's talk about your assets. And the way that the balance sheet is structured is that in the event, God forbid, that you have to sell a portion of your business or anything, or you might have to close it down and liquidate it. That's what the lenders want to know, from the item that's most liquid to what you owe, right? Or the value of your business. So with the assets, in most situations, it's going to be your cash, your checking accounts. It's also going to be any of your equipment that's depreciated, that can be easily sold. And also your accounts receivable, because the lenders want to know, if you have customers, how well are your financial systems, that they are paying you on time. So if you have a positive balance in your accounts receivable, that means there are some customers out there that owe you money. All right. So make sure that you're looking out for that. So those are your assets. The next thing you're looking at are your liabilities. So those are basically like your credit cards, everything that you have paid out. It's going to be your all your taxes. It's going to be your payroll if you have anybody on the payroll. It's also going to be any credit cards or accounts payable, right? So if you owe any creditors, if you're a contractor, you owe the paint people, or, you know, the Home Depot people, the Lowe's people, or whatever. That's what that's going to show. And then your equity. Your equity is basically the value in your business. This is where it's going to show how much you've put into the business, right? Your owners, what the money that you put into the business versus the money that you've taken out of the business, right? So your owner's contribution, that's what I was trying to say, and your owner's draw, what you've pulled out. And so any difference in that will also show the value in your business. And if you look at, again, the balance statement, the assets are going to equal your liability and your equity. So how does that play into your taxes? Basically, the way that plays into your taxes is that in the bottom portion of your balance sheet, you will see your profit and loss. So in addition to that, it's going to also contribute to the overall value of your business, henceforth your taxes. And it gives your lenders, it gives your tax preparer a strategy to want to see kind of how you trend in your business performance. So you'll know going forward, long-term thinking, if you're looking to expand or anything like that, or if you probably need a loan for cash flow purposes, That's what that's going to do. That's what the balance sheet does. It's for long-term planning. Okay? And then also it will let the tax preparer know how we need to be included, because with the bookkeepers, we work together as a team, how we need to strategically plan your expenses and your revenue if we have control of setting up your revenue, so we can make sure that you're paying the least amount of taxes humanly possible, right? So that's basically the nuts and bolts of the balance sheet. So remember, assets equal liabilities plus equity. All right. So again, CEOs, I hope that helped you. If you need additional support, you're like, man, I've been running this business, I don't have a clue as to what my numbers are. Click the link below. I have a checklist for you called the 3 financial mistakes that CEOs make in their business. It's going to help you tremendously. It's going to show you if you're setting up your business entity the proper way. It's going to show you if you have proper systems in place to bring your money in, and also proper systems to get your money out and spending it the right way. All right, again, click the link below, like and subscribe. See you guys later. Peace. Get in position.